Hey guys, and hey Ming. This is Ikura, and I am going to go over one of the trades that I made just a few days ago, which saved my entire net worth and my portfolio as the market absolutely tanked one day. And I want to show you how I got into that position as we were leading into it and how I timed the market well enough to actually gain over $1,000 when the market tanked, and to put that into context, that was well over 25% of my portfolio at the end of it. Let's dive in. I'll show you what I mean. I'm going to take you through SPY in late May, early June, and you can see this incredible ramp up over the course of a couple of weeks. And what's really interesting is this topping of SPY and then this huge down day. And this candle doesn't even really do it justice because it had a huge gap down in the morning all the way from this low all the way down into this candle here. So it was an incredible gap down, and a lot of traders lost a lot of money on this. I mean, this is over $20 in SPY. And so that's really a huge, huge move for SPY. To put
This
that in
is can you remind me which day this is? Was it Thursday, Friday?
No problem. So I don't remember the day, actually, exact day. Let me look at my calendar.
I think it was Friday.
Yeah, so this is the 10th and 11th. So this is Wednesday and Thursday.
Mhm.
So on Wednesday, the 10th, there was a little bit of a down day, but most people thought it was just a small down day. I'll show you a little bit why I thought it might not be and why I was a bit worried and what I did during this day. So I'm just going to take you through my moves, and then I'm going to show you what the result was at the end of it, and keeping in mind how much this gap down and how much there was to win. So what I had done previously is, as SPY was going up, I purchased these two SPY puts. These were mostly insurance, and most of my portfolio was in calls. I would say this is maybe about 10%, maybe 15% of my entire portfolio. And this is June 5th and 8th. I purchased these two puts, which is SPY 310 put expiring on June 22nd. And then as we got into June 10th, you can see that the market was going up higher and higher. I wanted to take a little bit more insurance because I felt like it was being overbought. I could see that it was hitting a bit of resistance up there. And so I bought one more put. And you can see along the way, the same day, I felt this reversal happen in real time. And this is, to remember, this is this day where the market opened up, gapped up, not gapped up, the market opened up, went up a bit, but then ended the day down. What I ended up doing that day was buying a call because I felt the market may go up. And when I saw it top out and couldn't go any higher, I actually immediately sold this call. And you can see that there was about an hour between these two, where I saw this, there was like a lot of resistance. I felt that the market maybe had turned, at least for the day and for the next day probably as well. And so I decided to get rid of my SPY call that I just bought and buy a little bit of insurance. And so I actually ended up buying another put right after that as well. And you can see that's at 11:40 a.m. Eastern time. And then as it continued to go different places, I even put in a limit sell for that call, an additional call that I had that same position and level. So by the end of this, I had 4 puts. And then as it moved into the next day, which is June 11th, the market tanked and it moved around quite a lot. So I thought it might bounce back up. I thought it had already bottomed. So I ended up selling all four of these as the market bounced around. I wasn't expecting it to go so low as it did. It ended up going all the way down close to 300. But I ended up selling these for a very, very healthy profit at that time, doubling my money on all of these puts at the very minimum. So this completely saved my portfolio. And I ended up with SPY going down from 320 on June 9th, a little bit down on that June 10th day where I felt that it was reversing and I repositioned into puts just a little bit more. And to be clear, I actually was still very heavy on the call side. I was still very bullish. I felt like the market could still go a bit more, but this is a lot of insurance. And you can see how when there's a huge down move like this, the insurance really pays off, because when it dropped almost 20 points, my portfolio went from being worth $3,100 to $4,700 in one day. And in fact, almost just a couple of hours at the open. In a way, I was very lucky, but at the same time, I also saw what was coming, and I saw that there were some possibilities of how bad it could go in a certain direction. And I made sure that my portfolio was balanced enough that I could capture some of the upside of a big down move in the market. Okay, that's the entire move between the 9th of June all the way to the 11th of June, and how I was able to beat the market just enough to keep my portfolio alive. Any questions?
What's interesting here is that you executed the strategy that you made some really quick moves on the day itself that enabled you to gain heavily. Unfortunately, this strategy has not really paid off the last 2 days, though.
Yeah, correct. Yeah, actually, I think I lost a little bit of conviction the next day, and I made some bad moves. But overall, I think this is a relatively good strategy to have a direction, be heavily invested in that direction, but make sure you have some insurance on the other side. And typically, I'm also noticing this needs to be somewhat long-term insurance, that it can't be 2-3 days out and you're waiting for it to tank. It needs to be a few weeks out that you purchase these calls or these puts, depending on which way you're thinking the market will go. And this way you still retain some of the extrinsic value of the puts or calls as the market swings back and forth. So where I feel like I did not do well the last couple of days was that my puts that I bought were expiring too soon. And the ones that I bought that are expiring further out are still worth a decent chunk of money, whereas the ones that were near in, I've actually lost a lot of value out of those. So good lesson for the most recent trading.
Oh yeah, and now that you've climbed your way out of like the pit of like under 1,000 and stuff, you could probably afford to buy some options with slightly longer expiry dates.
Exactly, and I will.
You mentioned that you were still holding a healthy amount of calls and puts on June 11th.
Yes.
Do you know? I'm curious. Like, I know not on the day of, but say the day leading up to it. Like, what would you say your rough split was between calls and puts? And
leading up, so I would say on June 10th, I went about 25% into puts. And before that, I was around 20. So I bought one more call, I bought one more put, and then I sold that call. So I think that moved the ratio just a bit. So I'd say I was at that day about a quarter puts and 75% calls.
That's really interesting. It's fascinating how you can gain so much on puts, even though it's not a majority of your portfolio. And you can actually, it can tank so much that it can really drive your portfolio value a lot higher, even at just 20-25%.
Yeah, absolutely. Of course, over the long term, you could lose a lot on your puts. If it's 25% of your portfolio and always expiring, with the money, and then they're worth nothing. So there is a little bit of caution there, but I guess if you're 75% bullish, that will slowly be able to earn you enough that you can offset the cost of insurance, which is puts, and still make money.
So what are you trying to maintain right now?
Right now, I'm still trying to get back to about 25% or 20% of my portfolio as puts. And this is excluding cash. So cash off to the side, and then, 80-20. of my positions. Yeah.
Oh, how interesting. Okay. The way I calculate is that I include cash in it.
Got it.
Yeah.
It's not a bad way to calculate. It gives you a better overall perspective. All right, guys, thanks for watching this video. Hope it was really useful to you to understand a little bit more how to position yourself when you're playing options. And we're going to do more videos like this in the near future. So remember to click the subscribe button, and we will see you next time.